Yes, welcome back. Today we are going to be continuing with our lesson from last week, whereby we were talking of trend lines, bullish and bearish channels. So today we are going to be looking at continuation patterns. We are mainly looking at continuation patterns and reversal patterns. That's the topic for this week's edition in our institutional supply and demand trading concept. Now, before we go into the continuation and reversal patterns, firstly I would like to illustrate when to buy at a demand zone and when do you sell at a supply zone. A supply or a demand zone can only be defined once price reacts sharply away from an area on the chart. This indicates, or rather shows us, that there was institutional sponsorship, meaning there was a buying or a selling by professional traders in that area which price would have rallied away from. For instance, on the Euro USD chart on the screen right now, you can see this area here. There was institutional selling respecting this supply area here, and when price returned to the same level, there was a massive selling to the downside. So now we've got this area here which hasn't been tested. You can see price rallied massively away and never looked back. It did test it here, but it didn't reach this zone here. So now you must always look for bullish evidence the moment price comes back into an area like this one. In this example, you look to buy when price retests this supply, this demand area. Sorry, that's a demand area, not a supply. So you only look to buy when price comes back to that demand area. Yes, in our advanced course further down the line, we are going to be looking at what makes a demand or a supply area a potential area to look for buy or sell trades. For instance, in this case, you can see that market rallied into a demand area. Market was falling, right? It created demand here by rapidly moving away from that zone. Then it retested this demand area here. Then it curved back, testing again this demand zone. So market, this area will also have been a good area to look for bullish evidence to the upside. But now, for a much sure trade or a clear trade, you must always wait for price to test the higher time frame demand, which is this area here. So when price comes back into this area, then you start looking for bullish evidence around here for market to pull back to the upside, maybe probably to test this high or this supply area. Now that's how you look to buy at a demand zone. Now let's look at how you sell at a supply zone. Now on the illustrated chart, you can clearly see that price rapidly moved away from this zone here. Market was ranging and then rapidly moved away. Now that will be your first supply zone, and then the moment it was sharply dropping away, you can see this demand area here, it was engulfed here. So price retested, created another supply, dropped into demand. See, these are the same scenarios on the same asset, Euro USD H4. So now when price retest here, this would have been a good entry point to the downside. You see, forget about all this other noise happening here, right? Higher time frame, you'll be shorting the asset, right? You can clearly see market is rallying to the downside. Now there was a correction into a newly formed supply area. There is your entry to the downside. See, this would have been a much better entry to the downside because you are selling from this supply zone. Look how market respected this area with 1 and 2 trade opportunities, which would have ripped massive pips in the market to the downside, right? In the event that market would have broke above here and closed above, then the area that you would have looked to sell from is here. You see, so when price came back to the $30, that's when you look for shorting opportunities to the downside. You see, so forget of all the noise that happens on lower time frame. Lower time frames are much better to look at when price is in the zone, when it's testing that zone. That's where you go to a lower time frame to look for entry levels, like the price you are going to enter at. So that's how you sell at a supply zone. Now let's take a look at bullish and bearish reversals. A bullish reversal is formed when price drops into an area of a strong demand and forms a base and then reacts sharply away from that area. Price moves very fast away from the zone. This in turn shows us that there was institutional sponsorship, in this case, which is buying by professional traders. When price comes back to that zone, you want to be a buyer. You want to be looking for long positions, right? On the chart illustrated, you can see dollar index. It's in a bullish uptrend. Dollar is moving in a bullish uptrend. It reached an area of strong supply, which is in this case the 97.80 price zone. Now take note of these highs. So we've got this high, we've got this high, and we've got this high, and we've got this high. You see, take note of those price highs. Now look what the market does. It reached a strong supply area and then it dropped into those highs. Market drops into these highs and then retraced back to the 97.8 area. You see, so now what does these highs tell you? They managed to hold the price. So this, when market closed above and rallied, so you'd have been looking to buy when it returns to these highs. When it returns to this level, you look for buy positions. You see, you look for buy positions. There's no way you're going to be looking for sell positions in this case. So now price dropped from a strong supply area. Price dropped and rallied. Now, how many opportunities would you have got to buy from here? A lot. Remember, we are looking at a daily chart right now, so there's a lot of long entries in this setup. You see, if you had longed here, yes, you would have had to hold a drawdown of this, but look how price rejected the lower prices. Look how they rejected and moved back to the 97.80. Look at this bearish candle here, right? Touched 97.80, massively dropped to where? To the demand area. You see, price dropped to the demand area and pushes up. It dropped again into the demand area, pushes all the way up. See, there's your bullish reversal. So you need to be in a position to read the market structure for you to identify these entries. For instance, in this case, these highs would have told you that they're not going to be easily be broken. Price wouldn't just break these prices and continue to the downside. Yes, maybe in the future it would, but that's after like it has presented a lot of opportunities to go to the upside. So you can clearly see here, buy when price returned to this zone because of this level here. You see, so there would have been a lot of opportunities to buy here. Drop to the upside. Remember, it's a daily candle, so that's quite a lot of pips that you would have got from that same setup. So now let's take a look at a bearish reversal. Let's take a look at the bearish reversal. Right. Now we are looking at a bearish reversal. This again is the reverse of a bullish reversal. Price rally into an area of strong supply and creates a base and then sharply moves away from that zone. This will illustrate to us retail traders that there was institutional sponsorship in this case, which is selling at that area. What you have to do now as a trader is to wait for price to come back to that area, and when it does, you want to be a seller. You need to be looking for short trades only. You need to be looking for bearish evidence to go to the downside. Right, you can clearly see gold here. It's a daily chart. Market was rallying. Market was rallying to the upside. Bullish momentum to the upside. See here, supply area. Impulsive move to the downside. Price retraces and continue with the downside momentum. So now what you have to wait for is for price to come back into this supply area. You see, the moment the price is in this area now, you look for bearish evidence to go to the downside. It's not that difficult, guys. It's a case of being patient and waiting for your specific zones in the market. The moment you are looking for setups from a 15-minute or 30-minute time frame without looking at the bigger picture, you have already messed up. Your analysis there is not going to be in your favor. You see, you need to understand what the higher time frame is doing. Like for instance, in this case, you can clearly see gold is dropping, came back into this supply here, it drops, came back into this supply here, it drops. So when it comes back again into this supply area, then you need to start looking for bearish evidence to go to the upside. See, that's your bearish reversal. So when market tests this supply zone here, then you take the market to the downside, especially at a point which price rallies massively away from without even looking back. You see, like here, see this area, this will be a bit far, maybe market won't test that, but this area, market is definitely gonna test that area and sharply react. Market test, sharply react to the downside. See, so you really need to understand this concept for a better understanding of your market structure. It's very easy, it just takes practice though. It's not a case of saying overnight you can be in a position to identify all these aspects. As you have noticed, we first covered the basics of supply and demand, then we defined the trend lines, we defined the channels, the bull and the bear channels. Now we are looking at continuation patterns, which is the bullish and the bearish continuations. We've looked at when to buy and when to sell. So all these concepts now, to bring them together as one concept, it takes time. It's not an overnight thing you can look at and say, no, now I'm gonna be profitable. No, it takes time and a lot of market time on the charts. You need to have at least a time in your diary that you dedicate to just reading the charts. You look at the chart. What is the chart telling you? What is price telling you? You see, that's the only way you can progress. Now, bearish continuation. We're gonna look at bullish and bearish continuation now. We first start with the bearish continuation. This pattern follows the current price flow, in this case, which is bearish, right? Price drops massively and forms a base, and then it will further drop massively away from the base that has been formed. The base that it forms from the first drop becomes a new supply area. Take note, it will be a new supply area, meaning when price comes back there, you're looking to sell. When price returns to the base, you must look to sell. You look for sell opportunities. When price comes back to that zone. On the illustrated chart, you can clearly see we are on a gold chart on our H4 time frame. Market reached this supply area here and dropped, but on its way to the downside, you can see there was this pause in the market. Remember, market cannot just drop. You see, there's no way it can just drop without correction or reversing. So now market dropped, paused, and then it dropped again. So this is our first initial drop, right? And then we had this base here. A base is more of a consolidation during the bearish move. It's more of a consolidation before another drop to the downside. So now, in this case, this area here, particularly the bearish candle at number 4, that area now becomes here an area of interest. such that when price rallies back into that area, when price rallies back in here, you see, you are looking to sell the asset. You see, in this case, a new supply zone was created between 1288 and 1285. You see, you can clearly see here a new level of supply area was created. You see, when price retraces back to that level, look for price action to go short. You see, when price comes back in here, this is when you look for sell opportunities. You see, you look for sell opportunities with a properly defined plan. It's not a case of saying, okay, no, I'm just gonna sell. You see, you already know that, okay, this area is gonna hold because there was institutional selling here. You see, so when price comes back there, the institutions will load more sell short, sell positions to the downside. You can see also here, let me highlight, you can also see here we had a price drop, then we had this base here. See, price dropped, another base here, drop. Look what the market did when it came back to position 1 here. It dropped, it came back, it dropped, it came back, it dropped. So all these drop areas, this would have been areas where you go to your lower time frame and go short. You see, you look for bearish evidence. Of course, price eventually engulfed the whole area. You see, now when this candle happened, this would have been your trigger to say, okay, this area has now been violated. It's no longer an area of interest in the meantime. You see, and then price came back. Price came back when it was falling again, drop, created a base. So basically we are repeating this same process that happened here, here, and here. You see, so when price comes back here, then you look to sell the asset. You see, you look for bearish trades, bearish evidence in the market. You see, that's how simple it is. So you must always know that for a bearish continuation, we need a drop, base, and another drop. When price come back to the base, then you look to sell. Remember, higher time frame bias has to be bearish for this type of setup. So now let's look at the bullish continuation. This pattern follows the current market price flow, which in this case is bullish. Price rally away sharply from an area and forms a base. From that base, it will react sharply again for the second time in the same order flow as price, which is bullish. The base that it forms from the first rally becomes a new demand area. And when price drops back into this area, we look for bullish trades only, meaning we will be buying the asset, right? This is a H1 time frame on CAT JPY. Higher time frame price is rallying to the upside. Market is bullish. Now look how market reacts to the 8108 zone. See, this is a strong demand area. That's a strong demand area. Price rallies. Now there's this bearish candle here. This just doesn't happen. This is enticing people to short. Remember of this area here. Most retail traders would have short when they saw this bearish candle, but with supply and demand, that is a base in the long term bias, which is bullish. Now, the moment that candle closed, look how market reacted. It rallied again. You see, there is your trigger. You see, there is the signs that you will be looking for when you are reading the structure. This area here, you see, becomes an area of interest. You see, we had a rally, base, and another rally. You see, remember, when it's bearish, it's a drop, base, drop. When it's bullish, we talk of rally, base, rally. So now, when you look at the asset and then you have identified correctly rally, base, rally, you see, so when market comes back into the base that has been formed during the first rally, then you look for long positions. It's that simple.
The time is 2200 hours.
It is that simple, guys. There's no need for us to complicate trading. The more we complicate it, the more we're not gonna make it. You see, it's basics. So we have a rally, base, and a rally. So when market comes into the base, only then you look for bullish evidence to take the market to the upside. Simple as that. And remember, your target, it will be the highs that has been formed during the rally. That will be your TP. See, your take profit areas. If it's in a bearish continuation, the lows that have been formed, like in this case, you see, bearish continuation. So your target will be this area. This will be your target after you have sold from here. You see, so you'll be targeting this price area. So there's nothing much difficult about the concept, but it's a case of really following the plan, like exactly what you are supposed to be doing. Now let's conclude this lesson for this week. Right, so these are the points that I expect from you. You have learned so far. You are now in a position to identify and understand supply and demand zones. You are now in a position to identify and draw trend lines, bull and bear channels. You are now able to draw supply and demand zones correctly and where to put your stop loss and your take profit targets. You are now in a position to identify and differentiate between bullish and bearish reversals, bullish and bearish continuation. It takes practice and countless hours on the chart to be able to identify the patterns that I've been speaking about in the past 2 lessons. Train your eyes once or twice a day to read the chart and to identify and mark out the patterns. The more you do this, the easier it becomes to see them on a live chart. Yes, hindsight study is very important. You must be in a position to read the chart from a historical point of view. You see, there's no point in you looking at a live market when you don't know what has happened previously. You see, you must be in a position to read the market structure. I'm in the process of simplifying the market structure ebook that I've sent out to the members, and once that is done, I'm gonna share it on the group so that everyone can be in a position to read it in a simpler way, because most people are struggling to read the current market structure ebook that I've given out. So once that is done in the coming 2 or 3 days, then I'll give it out and then you can go through it. But in the meantime, your homework for you guys in the coming 2-3 days, go through the notes that I have given you of the basics of supply and demand, and try to practice more on the chart. Try to identify channels on the chart. We had a very good channel on gold, I think on Thursday or last week, Wednesday, if I'm not mistaken. One of the students managed to highlight it, and the rest is history of what happened after. So the concept does work, but it requires a certain level of commitment from you as a trader. You're gonna have to work a bit hard. Study the information that I give you. There's a whole lot of information that I give in the group, and it's only for the benefit of you. Right. I would also like to take this time now to say, for those that haven't subscribed to my channel, you can click the link right below to subscribe, and make sure you've got the bell icon ticked so that you receive the updates whenever I post a video or a webinar on the YouTube channel. If you have any comments, questions, you've got all my contact details, WhatsApp number. Don't hesitate to ask. If you have comments and questions, you can comment below on the chat, on the video, sorry. And I wish you happy trading week. Market is gonna be open in about an hour's time, so let's get on with it, guys, and thank you.